How do Ijara lease-to-own homes work in Islamic finance? Have you ever wondered how Ijara lease-to-own homes function within Islamic finance? This unique approach offers a way for individuals to own property while adhering to Islamic principles. Let's break it down step by step. Ijara lease-to-own homes operate under a structure that complies with Sharia law. In this arrangement, a financial institution, often a bank or trust, purchases a property and leases it to the client. The client makes regular rental payments, which gradually lead them closer to ownership. This is different from traditional loans, as it avoids interest, known as riba, by treating payments as rent instead of loan interest. The first key feature is the lease contract, known as Ijara. In this contract, the financier owns the property and leases it to the client for a fixed period. The rental payments are clearly defined and must be transparent and fair, avoiding any uncertainty. Next, let's talk about rental payments. The client pays rent, which is usually fixed, allowing for easier budgeting. Rent payments start only after the client takes possession of the property. The financier or lessor is responsible for ownership risks, such as maintenance, insurance, and taxes. However, the client may have some maintenance responsibilities under a service agreement. Another important aspect is the ownership transfer. This model, called Ijara Muntahiya bil Tamlik, includes a promise or option for the client to purchase the property at the end of the lease term. While the client is not obligated to buy, they have the right to acquire ownership once all payments are completed. Since this structure is based on leasing and eventual sale, it aligns perfectly with Islamic finance rules that prohibit interest. The transaction is asset-based, meaning it is tied to a tangible asset, which in this case is the home. This reduces speculation and ensures that the transaction is backed by real property. In practice, a trust or financial institution buys the home and leases it to the client. Each monthly payment consists of rent and a portion that contributes toward ownership. Over time, the client's equity in the property increases until they achieve full ownership. At that point, the title of the property transfers to the client. This structure provides a halal alternative to conventional mortgages, allowing Muslims to finance homes in a way that is compliant with Islamic law. It avoids interest and ensures clear and fair contractual terms. Plus, it offers predictable costs and reduces financial risk by linking payments to a real asset under Sharia principles. Understanding Ijara lease-to-own homes can help you navigate the world of Islamic home financing while making informed decisions about your investments.